Time to see what's on the radar for Peter Hodson, Chief Investment Officer and President at Eye2Eye Capital. And I have to do it. You want to release the Kraken, don't you?
Release the Kraken.
I can't help myself. Whenever I hear Kraken, that's all I can think of is Liam Neeson.
Absolutely. I mean, it's got some meme power as well.
Different Kraken, though, to be clear, and it's not the rum either.
Yeah, no, exactly. So Kraken Robotics is it's a nice little small cap company that's done exceptionally well over the past year. So simply put, they build things for underwater exploration and defense technology. So things like sonar, radar, undersea batteries for submarines, things like that. So basically anything that's sort of that really needs robust technology that never fails, that operates all the time in harsh conditions. So the company's done very well on a couple of fronts. Really, they've totally ridden the defense wave. Obviously, defense stocks have gone crazy with the increased spending budget that all the NATO countries have to do. And you've got a situation here where Kraken is just sort of fits right into all these new submarines that are going to get built. Then you've got the company transitioned from a $1 billion market cap. It sort of went from 500 million to $1 billion. And that brings out a whole new set of investors who never looked at the company before. And it's like, hey, look at how fast they're growing. This is a pretty good company. They did an equity issue. They're all cashed up. And they've got a lot of new contracts that are going to hit the numbers over the next couple of years. Then you've got the Anduril IPO later this year, which is a big defense company that's going to be a hot IPO. And they've already got Anduril as a customer. And that company, as Anduril starts to grow and spend their newfound capital as a public company,
where are they going to spend it?
Where are they going to spend it? And you might as well go to your existing suppliers, build some new submarines, and give Kraken a couple $100 million worth of revenue. So it's a nice little story. It's certainly not risk-free. The stock's gone crazy. It's expensive because of what investors expect going forward. But then you've got Carney going, hey, let's
that's the thing.
Let's make Canadian companies better with our defense budget, and it sort of fits right into that theme.
Especially with a track record already, right?
Exactly, exactly.
There are going to be a lot of companies come knocking at the door, going, "We know how to do that," and they probably won't. But
exactly.
This company has a track record, and it's one I was just thinking about. It's one that could hugely benefit from AI as well.
Absolutely.
Remote control robots around in the oceans.
Exactly, and there's a very good moat here. I mean, if you're a new submarine company, you're just not going to go somewhere else and say, "Oh, hope it works." You want to go to a proven supplier.
Yeah, we don't want new submarine. You want somebody who knows what they're doing when it comes to submarines. Somebody else that knows what they're doing, Magna.
Yeah. So this one
blockbuster.
is an interesting stock for us. So we have a sister company called 5i Research, and our 5i Research customers hated Magna forever, like 3, 4, 5 years. It's like, why do you think this is a good company? But it was a good company because they've gone through downturns before. They've seen lots of recessions. They've got a good balance sheet. They've got the ability to make acquisitions. They've got EV technology. They've got diversified operations. So there's nothing wrong, again, from the numbers. The stock was trading at 7 or 8 times earnings. It was just ridiculous. And then suddenly last week, everybody loves Magna, and the stock hits a new high, and they raise their dividend, and everybody loves it again. So it's really interesting how the sentiment has shifted. So one, Magna did report good numbers, better than expected, and they're kind of turning the corner in terms of what's happening fundamentally. They're managing the tariff situation really well. Who knows? I don't even know what the rates are, but Magna seems to be able to manage it.
I imagine they're avoiding a lot of them probably through CUSMA.
Yes, yeah, absolutely. But again, some of the materials and their supplies are hit by tariffs. They raised their dividend. It was only 2%, but it's like, hey, guess what? We're doing well enough to give you more money as shareholders. And then you've got the anti-AI trade, like we were talking about, the Halo trade. It's pretty hard to have software replace a car manufacturing company, but it absolutely can help them in terms of efficiency and production gains and things like that. So suddenly everybody loves Magna, even though it really is not a changed company. It was the same as before. It's just they came out with some good numbers, and now sentiment shifts, and you can get, if you go from 8 times earnings to 12 times earnings, that's a 50% boost even before earnings have gone up. So those are great stories when you've taken out the risk in the first place.
Any concerns with it if CUSMA falls apart, though?
That'll be ugly in the short term for sure. I mean, you want to have some sort of agreement. But Magna's got exposure in Asia. It's got exposure in Europe. They will adapt, and that's one of the reasons why we would say it's a decent play, because it's not just a North American play.
All right, let's get in. We got 30 seconds. Nebius.
Sure. Nebius is a company that used to be called Yandex, and they were in Russia. And they said, we're out of here. We don't like this war. We're going to leave. So they renounced the war, moved to the Netherlands, and started a data center company from the ground up. So they have 300 engineers. Their revenues are going from $500 million last year to close to $7 billion this year on a run rate. $23 billion company. It's still kind of unknown, but because they're going from the ground up, they've got contracts with Meta and Microsoft. very profitable long-term contracts. It's just one to watch. We think it's very interesting.